Hello Realtors, welcome to Mortgage Talk. Today we're going to get an insight to what entails an actual FHA manual underwrite. Now I'm going to give you 10 seconds to grab pen and notepad, or you can just replay this tutorial again, whatever suits your fancy. Anyway, there are three major factors to consider. 1, alternative credit, 2, debt ratios, and 3, residual income. Today only, we're going to address the two major factors, alternative credit and debt ratios, because I have to keep this short and simple. I do not want to overwhelm you today. Now, the acceptable forms of preferred alternative credit can be found in the FHA Handbook 4000.1. And one must come from the preferred list. So let's talk about the preferred list first. Rental history is a preferred list. Only one late payment is allowed within a 12-month period. Telephone service on the preferred list. That's your cell phone bill. Utility service, and this can include cable and internet. You all, if anybody's been cut off of any of those primary listed on the primary list, do not turn those in to the loan officer. Once we see it, it's a done deal. We can't use it. The acceptable forms of secondary alternative credit from the FHA Handbook 4000.1 to alternative forms of credit can be found on this list. Number 1, insurance premiums, not the ones payroll deducted as auto, medical, and life. Second is rental insurance. Third, payment to child care providers, and we don't include this in your debt income ratio. Specialty stores such as Aaron Rents, rent-to-own, appliance stores. 12-month payment history on medical bills, not covered by insurance. That's on your secondary list. Automobile lease. Now, if that lease is an automobile, we're going to count that as a debt. Don't you dare forget it. 12-month payment on your children braces or adult braces. Satisfactory history is required on all housing and installment debt payments on the previous 12 months, and there can be no more than 2 30-day lates in a 24-month period. Remember, there can be no more than 2 30-day lates in a 24-month period. So we're going to stop for a second and we're going to show you this chart. So let's talk for a second. Debt ratios can go up to 50% on a manual underwrite. So let me tell you the three factors that are being considered on a manual underwrite. Number 1, we're going to verify and require documented cash reserves depending on your overall credit history. It may be 1 up to 3 months. Number 2, there cannot be a minimum increase in your housing and payment that exceeds $100 or 5% of your current rent. Let me repeat that and say it slowly. Your rental expense cannot increase by no more than $100 or 5% of your current rent payment. So if you're currently paying $1,000 now, 5% of $1,000 is $50. So let me give you those three factors so you know what can be included in the 50%. First of all, we're going to require for them to have 1 to 3 months of cash reserves. And if the AUS, which is your automated underwriting system, requires to have more, we're going to let you know that as well. Here's the thing that I need for you to know and write it down. Their rental expense cannot increase by no more than $100 or 5% of their current rent. So if they're paying $1,000 now, their new house note cannot exceed $1,050. Now, the third thing is residual income, which is used on VA loans, and we're not going to discuss this during the tutorial, but on a manual underwrite, we have to use that VA residual chart. I hope you learned something new today on understanding the criteria for FHA manual underwriting. I am Lydia Smith, NARED Mortgage Committee Chair. Our email is mortgagecommittee@nared.com. And this concludes Mortgage Talks.